Hello, ladies and gentlemen, my name is Greg Michalowski from ForexLive.com, and this is the weekend review and preview for the dollar versus yen as it keeps on making new highs. Before we get into that, let me remind everybody that if you like this video and want to see more of this video, all you have to do is subscribe to our Forex Live YouTube channel by clicking here. And for your daily Forex news and analysis, ForexLive.com is the best place, the proven best place for that. So make sure that you bookmark this page and visit us regularly during your trading day. All right, let's get into the dollar versus yen here. I'm going to start off by taking a look at the weekly chart as we head into the weekend. If we were to connect the most recent highs, the 2013 high, the 2014 high, which came in on the first day, the old 14 high, which came in on the first day of the calendar year. This week, what did we test? We tested the top side trend line at the 107.35 level. The high for the week came in at 107.38. The close for the week came in at 107.35. So pushing against that ceiling, folks. Trying to get through, trying to get on top of the roof and move higher here for the dollar versus yen. If I go back in time and take a look at when was the last time the price traded this high, and you have to go all the way back to 2008. That is 4 years ago. In fact, September of 2008 was the last time the market traded at these levels, and so this is a 6-year high. That's easy enough to figure out. The next real target here off of the weekly chart, or off of this longer-term chart, you'd probably say, you know, be going up toward the 110.67 or so level, which was the high for 2008. And so that would require pushing through that ceiling and getting on top of the roof instead, and starting to have further momentum to the upside. In that case, the sky's the limit at that point. So there's it's a long way away to 110.67. But let's try to look at some other charts, see if we see any other key technical levels above that level. But off the bat, if we move over that 107.35 level in next week's trading, it'll be a little bit higher because we're in a new week. But if we move above that level, that's going to mean stay above it to keep the bulls in charge. If we move back below it, then we could see some profit taking on the failure of that move to the upside. So that's what we're going to be paying attention next week, is that key technical level. It doesn't disappear, okay? Let's look at the daily chart here, and off the daily chart, here's that line. That's the line connecting the highs from 2013 and 2014 here. So you can see it's banging against that wall. If we take a look at the closer last couple months of trading, we've seen the market move away from the 100 and 200 day moving average. Classic move away. It's called three's a crowd when the market two moving averages come together. You look for and anticipate a break, and we did, and we saw the momentum move to the upside. Now I have this little trend line here that started way back when, and I put a parallel trend line across the tops. And if you look at the daily chart, we came up to that top side trend line, closed above it, and we closed above it over the last 2 trading days. I wouldn't call this like the channel. But perhaps this 107.02 level, or where the trend line comes in, probably on Monday coming in around the 107.08 level, might be a level of significance on the downside for the dollar versus yen. Again, there's really not much that we can go off of here. As far as finding other technical levels on the top side, because we are above this top side trend line here, and here's our big trend line off of those highs. So you know, it would be stay above this 35 or 45 level, whatever next week's high is going to be, somewhere around the 40 level. That would be bullish. Move below, and it's more bearish. Maybe it's just something here off the hourly chart that we can find the next target off of. If we connect the highs here, ironically off the hourly chart, we also came up to resistance level at our high in trading this week. So there's a number of reasons why the market paused right here. And that trend line continues to the upside, of course. And when we come into trading on Sunday night or Monday morning in the New Zealand in the Far East session, we're going to be at the 107.60 level is where that topside trend line is going to come in, somewhere around that level. And every hour that goes by, it's going to move higher and higher and higher. So if we move above the 40 level, at least we have that next level to target on top of the ceiling. It's not just the sky we're looking at. All right, so keep that level in mind. Draw that trend line in on your chart, and you'll be aware and prepared for it. On the downside, we know off of the daily chart, if we break back below this line, which looks like it going to come in about the 107.09 level. Let's say we break back below the 107.7 level on the downside. We're gonna start be looking for a move toward the 100-hour moving average. The 100-hour moving average currently comes in at 106.67.8 and moving higher as time goes by. We haven't been below the 100-hour moving average since this day right here earlier in September, where we had a couple closes off the hourly chart below that level. Prior to that, folks, we have to go all the way back to August 29th here, where the market spent at least a day or so below that 100-hour moving average. So it's been a while since we moved below that 100-hour moving average, and that level is going to be in play next week if the market decides to go to the downside. Now remember, the trend is your friend. The trend has been squeezing the shorts all week long. We started the week down here and we ended it up here. So you can't fight it. You can't fight it until the sellers start to prove that they are winning some of the battles. They are winning some of the battles. Staying below that topside trend line off the weekly chart, the daily chart, the hourly chart is just a hope that the trend stops. It doesn't necessarily mean that the trend is stopping, but it's just a hope that the overbought of the market is stalling. It doesn't, until we start to make some moves below things like the 100-hour moving average or even the 200-hour moving average, who remains in control? The buyers. My name is Greg Michalowski for ForexLive.com. Talk to you next week. Good fortune with your trading. Have a great weekend. Bye-bye now.